Last year, my colleague Matt Stiff walked us through the history of artificial intelligence and discussed the current excitement and tremendous opportunity that the technology presents. We shared with you how this excitement is exemplified by how quickly AI applications like ChatGPT have been adopted by users, a pace faster than any other popular technology application. Another way to measure this excitement is to follow the money. The headlines you see here are all from just the last 4 months, and new ones are written daily. Money talks, and it's clearly telling us that the biggest companies in the world agree that there is something to be excited about. In their second quarter earnings updates, it was reported that Amazon, Microsoft, and Alphabet, the parent company of Google, all invested in artificial intelligence and all spent more than they originally expected to. These key players in the industry have been labeled hyperscalers because they are large cloud computing companies that also own and operate their own data centers, which enable them to house and operate AI workloads. As you can see from this chart, there's been a huge increase in investment by this group from 2023 to 2024, and we estimate that this trend will continue through at least 2026. This spending is necessary to stay competitive with state-of-the-art hardware and increased server capacity so they can continue to train and run their AI models.
So, Justin, based on this chart and second quarter earnings, third quarter earnings, what they're continuing to tell us is coming down the pipe for 2025, it's evident that these large hyperscalers are spending a heck of a lot of money on this investment space. Is there a risk of overspending on artificial intelligence?
Well, it certainly doesn't seem that corporations believe there is. In their second quarter earnings report, Alphabet CEO Sundar Pichai responded to questions of the multi-trillion-dollar company's capital expenditure numbers in AI by saying he believes the risk of underinvesting is dramatically greater than the risk of overinvesting. But we wanted to put this spending into perspective for you. So here we're sharing the total capital expenditures and research and development costs as a percentage of cash flow from operations for the information technology and communication services sectors, as well as Amazon. And it's clear in relative terms, the current level of spending is not extreme. We're nowhere near the level seen during previous tech innovation cycles, like the large increase you see leading up to the dot-com crash. This is primarily true because the main players that we think about today in the AI space are mature companies who have consistent proven businesses, which were born out of previous innovation cycles.
So let's dig in a little deeper on that idea of this innovation cycle. When you think about this current trend, where do you think we are in the innovation and investment cycle for AI?
Well, we created this next chart to give a visual representation of where we may be in the cycle. First, we plotted the capital investment line, which begins low but increases very quickly with time. And as we've laid out, we are well on our way here. Next, much later in the cycle, revenue begins to materialize. As we speak today, revenue from AI applications is minimal. The last line in blue represents perceived risk. While risk is high at the beginning of the cycle, the excitement around the new technology overshadows it. As time goes on and investment continues, impatience sets in. The excitement wanes, but the risk remains until revenue materializes. Now, it's difficult to say exactly where we are in this cycle, but we estimate we're somewhere here in this shaded area. We're still very early in the cycle with investment accelerating, risk high, and there's little revenue to speak of. But I think that's an important point to reiterate. We really do think that we're still in the early stages of the growth phase of this technology cycle. But we expect to get some more information next year and in 2026 as these companies begin to project what revenue might look like from their AI products.
So, Justin, as we look at this chart and we see that investment size continuing to accelerate and all this spending that's going into it, what does a positive return on investment really look like? Can you help us quantify what would be required of that orange revenue line for this to be deemed a success?
Based on the total estimated capital expenditures through the end of 2024, so for this calendar year, there are estimates that there needs to be an additional $600 billion in increased revenue per year from AI applications in order to make the return on the investment in AI worthwhile. Now, this is just an estimate, but if this figure is eventually realized, not only will the current investment pay off, but it also means that generative AI has become the significant innovation we all expect it to be. Now, is AI the best thing since sliced bread? I would venture to guess that's not the case for most of us at this point in time. I know I personally experienced more efficiency gains by not having to slice the bread for my kid's grilled cheese sandwich than I do for any generative AI powered application. But there may come a day where we take for granted the power of artificial intelligence, just as we do when we open a loaf of bread. Now, investors who have the appropriate temperament and long-term time horizon will certainly benefit from investing in this theme. And as clients, you are invested in companies who are investing in this space, both as hyperscalers, but also as future customers who will be utilizing these products and technologies to modernize or create efficiencies in their own businesses.
Justin, let me know when AI can start making my daughter's peanut butter and jelly sandwich for her lunchbox every day, because then that would be real efficiencies in the Mazaka household.
Exactly.
So we talk about all these benefits. Companies are excited about the benefits. We don't always talk about the obstacles and the risks that are out there. What obstacles could hinder the long-term success of artificial intelligence?
Longer term, there are at least two obstacles that will need to be overcome, including regulation and the electricity demand. At the moment, there is little regulation around AI processes and output. For instance, if you enter a prompt into ChatGPT and receive a response, do you have ownership of that creation, or does the AI software company own it? Regulation is important to draw clear lines and protect intellectual property. But the same can be said for protecting consumers and their data. Dialoguing with AI programs is not a private conversation between friends. So consider this your public service announcement to never input your protected personal information into an AI prompt. But as this technology continues to rapidly evolve and becoming more capable, creating a regulatory framework will become simultaneously more difficult and more imperative. The second obstacle that will need to be overcome is the electricity requirement, the demand for electricity that is required with AI. And so, as you can see in this chart, we've experienced a boom in compute instances since 2019, which is a reflection of the growth in the number of AI models as well as the capability of those models. So as AI continues to grow, so does the electricity demand. So we wanted to put this demand into perspective for you. So in 2023, Meta, the parent company of Facebook, utilized an equivalent amount of power in its data centers that is required to power 1.4 million homes. So that means that Meta consumed as much power as all the households in a city roughly the size of Chicago. The available supply of electricity from our grid is certainly an issue that corporations are going to have to overcome, and obviously has other implications for you and me. But you may have seen in the news recently that the owner of the dormant 3 Mile Island nuclear plant in Pennsylvania is planning to invest $1.6 billion to revive it. And they have an agreement in place to sell all the output to Microsoft as they seek carbon-free electricity for data centers to power their AI initiatives. Innovation in one area often demands innovation in others, and we're starting to see some of that play out. But the strain on our electrical grid and regulation around AI are certainly broader trends, and certainly have implications based off of the elections and the priorities from the new administration. And so we're following these themes closely, and you can expect to hear more from us at some point in the future.